Thank you, and good morning, everyone. Good afternoon for those following from Asia. And I'm very glad to be here in person today, contrary to last year, and celebrating this 5th anniversary of what started as the Paris Infra Days with Paris Europlace and became this quite successful event that we're all waiting for every year. I'd like to talk a little bit about what we've been through this crisis, not to dwell on it, but rather think about drawing some lessons and perhaps some anticipations for the coming years. It has been a crisis, and crises are usually quite important to the infrastructure asset class. This is not the first one that has actually helped the asset class. We've had a few in the past, and some of the solutions to growing the economy back has always somehow gone through this infrastructure asset class. It's good to say it over and over. This crisis has shown again that the asset class is resilient to this kind of crisis. Generally, of course, there are subsectors that suffered more than others, but we can say that, when I talk to a number of asset owners, some of their issues were more about having an over-allocation due to loss of values of other asset class from infrastructure rather than the other way around. So this resilience, it's quite important because it's also linked to some of the challenges that we are facing for the future. The second one, which remains to be proved again, is the infrastructure asset class is meant to be resilient and protecting investors from inflation. And here we are with growth and new inflation. It is time, guys, to show what we can do. And actually prove that this asset class can bring significant protection from inflation and maintain real returns for investors at a time that there are about too many uncertainties for them to worry about. So this is what this asset class can bring. So those two important things. I would also like to talk about the recovery plans. This crisis, we've seen the reactions of government and through recovery plans. What's different compared to the previous recovery plans? Because every crisis we had recovery plan. I'd just like to remind you that the US is going through its 3rd infrastructure $1 trillion plan. Hopefully this one will be more efficient than the previous. That Europe has gone through Juncker plan, although unknown by many people, has mobilized €500 billion, not necessarily only on infrastructure, but quite important in the infrastructure sector. And with the Next Gen plan and the recovery plan for Europe and all the EU state members, we are mobilizing significant amount of public money to support the economies, but through also infrastructure investment. And so this trend, I've said the main difference this time is scale. And scale has come for many reasons. I guess this crisis was unprecedented, and therefore government felt compelled to respond with strength, with a lot of scale. But also scale has come because of the new challenges, or maybe not new, but at least the awareness that the challenge of transforming our economies into a low carbon and climate change is pressing. And therefore, this is, when we look forward, what infrastructure has been contributing quite a lot to. When we see the market today of all the infrastructure practitioners, then no longer, at least in Paris, no longer any infrastructure fund that doesn't have an impact strategy, that doesn't have a low carbon strategy, no banks and no financial asset owner or asset manager is actually ignoring this topic or doesn't have a strategy that is quite strong. So the idea today is how do we scale up? It's no longer about, thinking about whether it's the right thing to do or not. It's scaling up is what we're all trying to do. And it's quite interesting to see the speed at which the market is actually scaling up. Just as a little ad, I would invite you to follow the new Sustainable Finance Observatory that Finance for Tomorrow and a number of public players are promoting, providing data for the transformation of the marketplace into sustainable finance. And clearly, infrastructure as a large part of the strategy to a low-carbon economy. I will not list the number of net zero initiatives for asset managers, asset owners, and others that is driving our business and this asset class. But it's very important to also understand, and this is sort of my second point in the sort of anticipation for the coming year, that nothing happens without a very strong collaboration between public and private sector. I mean, this is the example today, just reminding you that this Infra Days we're creating together with the French Treasury and the marketplace. But a number of very important initiatives over the years have been really carried out by this collaboration, and it produces results. Just to sort of flag a few, addressing different issues. I like to sort of remind us that since this asset class became one, the G20 has carried it through every single year, through every single presidency, as a very, very important topic in terms of developing quality and sustainable infrastructure, including the Italian G20. LTIIA that I chair has worked with the D20 and the development banks throughout the years, but also with the Global Infrastructure Hub that was created by the G20 back in Australia years ago to really produce a number of things and to really make this asset class understandable, including a number of things on data, which is quite important for investors, for practitioners, but also for governments in terms of understanding and managing transformational progress in the infrastructure asset class. Second initiative, and Augustin this morning mentioned it, FAST, and that's what we're talking about. FAST Infra is labeling infrastructure assets and projects to help scale the development of such projects in the emerging market. Great initiative from HSBC with a number of players really supporting it. And that is the type of initiatives, public and private initiatives, that are helping our asset class. The other initiative that I would like to talk about is the Impact Task Force, which has been initiated by this ministry, in particular Minister Olivia Grégoire, to really ask the marketplace to figure out a way to clarify what impact means with a definition, but also the tools and the necessary tools to be able to measure impact. I mean, we're all facing, as infrastructure practitioner, requests from our investors to know the temperature of our portfolios, the impact, the social impact of our portfolio, the impact on biodiversity. Hence, all the great things that this panel has actually been mentioning in terms of technology. And that has been really a drive from this Impact Task Force. And last one that I would like to mention, because it's very dear to my heart, is the African Infrastructure Fellowship. After a first year with just a few in the middle of COVID participants from 10 countries, we had 120 plus Candidate could only retain about 25 from 25 countries from Africa. There is a need to build capacity on both public and private sector in terms of understanding and developing infrastructure if we want to fill this great gap that it keeps growing in terms of infrastructure requirement. Moving on, I had planned to talk a little bit about technology, but I think this this panel before me actually unveiled everything possible on the topic, so I can quickly pass. But it is an important drive, and technology is not only necessary to support this acceleration into a transition to a low-carbon economy, but it's also important to optimize usage, to optimize long-term maintenance. It's really, when you think about quality infrastructure, a very important tool, and examples were given there, so I won't go further much in there. I mean, hydrogen is one very key topic, and I'm very glad that this market is really going into this. I'm actually proud myself that we've been able to close just last week the largest hydrogen plant in French Guiana to actually produce clean hydrogen and help through storage the peak hours in that place. So clearly things are moving, and investing in technology and infrastructure is the way to go. One other topic that I wanted to mention, because to me it reflects the fact that there is a wider acceptance and recognition of the infrastructure as a real asset class, is the relationship with public markets. We've seen recently that public markets have sort of entered broadly infrastructure in many ways, and it goes both ways. I mean, one way is the more technology infrastructure-driven initiatives actually use public markets to grow faster. And this has been true with a number of IPOs on some of the tech companies. And I was just discussing with Arnaud the fact that the Paris place has actually come to number 10 in terms of attractivity, mostly because of this tech side. But we've also been, and this I must apologize, because my own participation was to SPAC Allego on the New York Stock Exchange, so apologies to Euronext. But it does mean that we have access to liquid markets to boost the growth of infrastructure technology. But it also goes the other way around, and I really want to sort of congratulate our colleagues from Martin with their recent IPO. Really well done, because that does mean that investors recognize this asset class and the practitioners of this asset class as that has a long-term future as a real one. So it's the way that public markets is entering private markets in a way. The other way around, we see, and we've seen last year, a number of public companies that were infrastructure-driven going private. So this sort of osmosis that is being created nowadays is quite interesting to follow, but it is, to me, a positive sign of more capital coming to support our asset class and the acceleration of the transition that our economy is going through, and it's quite important to support that. Having said that, it's left to me to just wish you because I think I've gone out of time, or I'm perfectly on time. I wish you a very good conference. I mean, I've listening to the first speeches, and this panel really reassured me that We have here all the knowledge, technology, skills, capital to make it happen. So thank you.